Good morning. We will pay attention to the preparation of final accounts at the end of the financial year. It is essential that the financial result must be determined at the end of the financial year so that the enterprise can see whether they made a profit or a loss. So all the nominal accounts must be closed off and transferred to the final accounts to determine what was the profit or loss of the business. The term closing transfer describes two actions, closing and transfer. The nominal accounts have to be closed, so it means they are balanced, and the balancing figure is transferred to the final accounts by means of a closing transfer. Closing transfers are completed in the general journal at the end of the accounting period to transfer the balances in the nominal accounts to the final accounts and to transfer the balance in the drawings account to the capital account. After the closing transfers have been posted, there will be no totals or balances in any of the nominal accounts because they were all closed off and transferred to the final accounts. When we do the books of a business, we will first of all use source documents, that is invoice, receipt, check counterfoil, and then we will use these source documents and record it in the subsidiary journals. From the subsidiary journals, on a daily basis, we will record the entries in the debtors ledger and in the creditors ledger. And at the end of the month, we will record the totals of the subsidiary journals into the ledger. We will complete a trial balance at the end of every month to ensure that there was no mistake, so the debits must be equal to the credits. In the general ledger, we have a balance sheet section. That is all the accounts that will be transferred at the end of the year to your balance sheet to determine your financial position of the business. All the nominal accounts are income and expenses and will be closed off at the end of the year to the final accounts. For service undertaking, we will only have a profit and loss account because they don't buy goods with the purpose of selling. Where in a sole trader, we will have a trading account and a profit and loss account. In the trading account, we work out what is the difference between the sales and the cost of sales to determine the gross profit. In the profit and loss account, we will add all the income to the gross profit and deduct all the other expenses to determine the net profit. The information that's recorded in these final accounts, that is your trading profit and loss account, will be used to prepare the financial statements at the end of the year. So this is the cycle that will be used from the time that the source documents are completed until they appear in the financial statements to show off what is the financial result, that is the profit or loss of the business, and what is the financial position. And the financial position is the assets, liabilities, and equity of the business. It is very important to distinguish between the final accounts and the financial statements. The final accounts constitute a part of the general ledger, so it is T accounts that we prepare in the general ledger, and we complete double entries where we close the nominal accounts and transfer it to the final accounts. The nominal accounts that is called the final accounts is your trading profit and loss account. Financial statements are not part of the ledger. They are prepared separately from the ledger and are not prepared according to the double entry principle. All the information that appears in the trading profit and loss account will be used to prepare the income statement. In a service enterprise, you will only have a profit and loss account. In a trading business, you will have a trading account and a profit and loss account. In a service business, you will have a statement of profit and loss or income statement and balance sheet. In a trading account, you will also have an income statement and a balance sheet. Final accounts are prepared at the end of the accounting period. So once a year, you will close off all your nominal accounts. Financial statements can be prepared at any stage during the year to see what is the financial performance and position of the business. Final accounts are a means of closing the nominal accounts to determine the financial result. Financial statements are a setting out of the financial results for the purposes of reporting, planning, and control in the business. To determine the financial result, you will calculate the gross profit and the net profit in your trading account and profit and loss account. To reporting the financial result and financial position, you will complete the income statement and balance sheet. Final accounts are prepared in ledger, and they will also be T accounts. Statements are prepared in vertical format in columnar form.